This is Alan Bush with ADMIS in the stock index futures. After a couple of days of higher prices, we are seeing some pressure developing today. Looks like traders getting rather bearish from a technical point of view. Also, we have the ongoing geopolitical situations seen as a negative. So, hearing more and more bearish talk from traders and analysts and what we are hearing on the television. However, keep in mind that interest rates are still historically low, and it also appears that interest rates will probably not be increased anytime soon, even though the consensus view now is that the Fed will raise rates at their July 2015 meeting. Our work suggests that when they do raise rates, it will be later than that, probably in 2016. So with interest rates as low as they are, I would expect that this break that we are seeing or have seen over the last couple of days will not follow through to the downside. Even though futures lower today, I think we can see a recovery back to at least unchanged on the day, and we still believe that the main trend is higher. We also continue to believe that we will see some new historical highs later this year in the S&P and in the Dow. Over in the foreign currencies, some flight to quality buying continuing to come in to the US dollar index. However, this market may have topped out now, especially with the employment numbers that we did see on Friday that were not quite as strong as some analysts had anticipated. Seeing the pound gaining as the UK services industry increasing. Also, we are seeing pressure in the euro currency as the services sector showing signs of weakness in the eurozone. So the pound gaining on the euro, which is what we would expect to see. We would also expect this trend to continue for a very long period of time, probably through this year. We have central bank meetings this week. Later this week, the ECB will meet, Bank of England will meet, Bank of Japan will hold their policy meeting. All of these central banks most likely will keep their policies unchanged. So from here, look for the pound to gain on the euro currency, look for the yen to continue to weaken, as ultimately the Bank of Japan, I believe, will be forced to add more accommodation to their banking system, although probably not at this week's meeting. And credit markets, after a couple of days of higher prices, some profit taking coming in, still feel that the main trend is higher, still feel that the gains that we are anticipating will be led by the 30-year bonds. So any break in treasuries should be used as a buying opportunity, especially for the 30-year bonds. Once again, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.